I would like to start out by revisiting the fundamentals of UK's attraction as a safe haven, especially for the viewers who are new to us and who have just joined us for the first time today. This is just a glossary of why many international investors still picks London as a top destination in terms of the long-term wealth preservation. London market currently benefits from a number of strong underlying market drivers. London continues to remain at the world's top table, attracting and retaining the best talents due to its, best, superb education system and ever-evolving economy. Despite the changes in the tax regimes, London still comes out as one of the most tax-efficient market for international buyers. Of course, not to forget the currency arbitrage, which is one of the motivating factors for many overseas purchases. According to Oxford Economics, the sterling is expected to rebound to about US dollar 140 in 2023, which is approximately 13-14% increase from current rates of US dollar 1.22. The other key factor is, of course, population. Population is expected to grow in the capital with about a 1 million increase in the next decade. And this is interesting and one of the most important drivers for housing. When you break it down to study the fundamental population change, we actually note that 62% of UK babies are now born to parents over 30, which is higher than the number that was projected 20 years ago. This would also mean that there will be a need for, this will also mean that the need for a family-sized private homes is being delayed, which will then support the growth of the rental market. On top of that, there is already an undersupply of new homes, which is being delivered, and that means housing is not being built enough to keep pace with the demand for new homes. It is a factor that we consider in our forecast, which I will share in the next slide with the revision forecast. So recently, our research team finalized and revised the forecast that was recently released in end of May, following the past few months of market inactivity due to the COVID-19 lockdown. You may actually find the commentaries in our online resource center. So if you want to read in greater detail, please do reach out to your local consultants for the web link, as I'm only summarizing the key points today. The key takeaway is that while sales remain subdued currently, we are actively seeing green shoots of recovery and a change in customer behavior ever since news of the market reopening. However, we do expect there to be a continued uncertainty for many, but once the dust settles, we find buyers who remain active this year will typically be more opportunistic in nature and will seek to secure good deals. Hence why we predict a price fall of about 8 to 9% in property prices this year and as a part of 2021. But coming into the mid of next year, we should expect price growth in Greater London, where we deem to be one of the best performers. Similarly, in terms of the rental market, it will be slightly affected, with many households expected to feel some pressure on their job security and incomes due to the COVID-19 crisis, especially those employed in hospitality and retail sector. We expect some households looking to negotiate down rents, which will result in average value falls of approximately 2% across the UK in 2020. However, we feel that these falls will be tempered by an increase in rental demand from people choosing to delay their home purchases of the short term, and we forecast that positive rental value growth should start to return again in 2021. So to summarize, in my next slide, COVID-19 has created a short-term shock to the market where transaction and house prices will fall during this interim period. However, the recovery will begin in 2021 with prices and transactional activity picking up from then, with London seeing the greatest bounce back in value. Not to forget, as for an investor, uh, in our mind, we should be considering sterling arbitrage, which is expected to appreciate in value over the next 2 to 3 years by about 13 to 15% against the US dollar. And what that will also mean that is that it is a great buying opportunity now for those of you looking for good deals and long-term returns. Now, let's us talk about regeneration. It is actually one of my favorite topics since my university days as a social science student. And personally, I continue to advocate urban regeneration as I feel the positive impacts definitely outweighing the not so positive impact. London is one of the oldest urban cities in the world. As the city evolves and grows, there's always a strong need for proper urban planning and regeneration to take place in order to support the needs of the society. Regeneration happens when underutilized land goes through rehabilitation to create a whole new community and, in most cases, the local economy. In the UK, most of the regeneration master plans are often major mixed-use developments that extend over large areas and period of time, most of the time being spearheaded by strong developers such as Berkeley Group in conjunction with the local authority. In JLL, we actually have a team called the JLL Upstream that supports and leads clients around the world to measure and improve the impact, not only in terms of house building, but also, as said, the placemaking and community building. So actually, my presentation is in consultation with the JLL Upstream research team. And if you're interested on this topic, I'm more than happy to connect with the researchers later. So let's look at the three impacts of regeneration, which is actually interlinked and intertwined with one another. The first one being social impact. While there tends to be a less legislative drive behind creating social impact, the business imperative is very clear. A developer that is part of a redevelopment cannot ignore the importance of creating equal, fair, and resilient communities because that will be short-sighted. They have to look into the current and future operating environment. So this is where developers such as Berkeley comes in terms of placemaking and community building for the long-term good by introducing and bringing in commercial space, retail, community spaces, creating an ideal place for a new wave of residents who will come to live, work, and play. The next point is economic impact. This is primarily, like I said, interlinked and seen from a lens of a socio-economic impacts, which is interrelated to one another. Master plan will bring in commercial retail element to improve the livability of regeneration areas, therefore leading to greater economics of the local area. It is paramount to the success of a master plan and will have a direct impact in the increase of house prices, which is beneficial, of course, for a sustainable investment for those looking for long term. Lastly, environment impact, which is a big topic in today in our generation, because there is always a big push for sustainable living. Local offices are always ensuring that new homes pass the sustainable ratings as part of a green movement that will then create great shift in lifestyle change. And I'm sure everyone will note, especially during times of a pandemic that we are going through right now, really put people's perspective and focus on overall well-being, health, and safety. We actually covered most of this during our Green Home webinar that can be found on our YouTube channel. But the key pillars are net zero carbon, climate risk, biodiversity, and energy and carbon management, which are all very important aspects of future-proofing your investment. Later on in the presentation, Rob will share this in slightly greater details and on how, as a developer, they have put this all in place. And Southall Waterside will be a good example, as it's just the beginning of the master plan. Therefore, all in all, a resilient place in terms of social equality, community cohesion, higher disposable income will create a place which is better able to ride out the current and future crises. This will help maintain the value of assets and reliability of rental returns for both residents and investors alike throughout even times of crisis. During times of non-crisis, we see these values being better performing and above market average. So hopefully the understanding of the Grand Master Plan and regeneration hotspots will provide you with an excellent background to consider your next property investment. So let's take a quick look on successful case studies in London. I would say in my years of being involved in London property market, these are the key redevelopment projects with good track record that had been delivered with such great success, not only in terms of price growth, but also in terms of community building and place making, as I described earlier. In fact, to share my own experience, I am also an investor myself, having bought in Woodbury Down, which is one of my favorite development in London. And I did so during the early phase. Of course, the initial intention for me was more on the sentimental value because I actually did a case study on Woodbury Down, which was previously known as Woodbury Commons, as part of my dissertation in university. So when I had the chance to be part of this project, when I joined JLL, I jumped in on the investment bandwagon, and up to date, I'm still holding on to my flat, which has been rented since day one. And as an investor, I really see the value of and impacts of regeneration and how I get to reap the investment appreciation of such regeneration master plan. So the next slide will demonstrate the price growth of these projects. Berkeley Group is, as you know, one of the most reputable developer in the UK, having won many awards on sustainability, place building, and contributing to the large community in the UK. They are indeed the role model in this aspect, being the first movers in the residential sector, and will be riding the waves ahead of their peers and competitors. You can see here with prices having doubled over a course of approximately 10 years across these three developments, as I've mentioned. So there are a lot of factors that contributed to the success. One of it is the crossrail effect, which I'll show in the next slide. One of the reasons, of course, is the investment in infrastructure. As the city gets more connected, it allows many to experience living a little bit outside of the central location for the greater space and greater greeneries. Crossrail will be cutting commuting in half, and developments such as Royal Arsenal Riverside, which I showed earlier, is a testament on how crossrail effect has benefited the community as well as the price growth of the project. So where then is the next hotspot that ticks all of these boxes? This is where we present Southall, which is the next largest and exciting redevelopment master plan in West London. And there is no one better to present this project to you than Mr. Rob Willis himself. So over to you, Rob.
Great, thank you very much, Widia. Good afternoon, ladies and gentlemen. Thank you very much for joining me here today. My name's Rob. I'm here from the Barclays Singapore office, and I want to introduce to you our brand new launch at Southall Waterside, which is essentially going to be one of the largest and most important regeneration projects in West London. So exactly where does Southall sit? So Southall sits essentially in West London, in between Heathrow and the West End. It's located in the London borough of Ealing, and ultimately means you have fantastic access to the whole of London, to the west, but also to the east, and then to the west, you have access to the rest of the UK. So in terms of the site itself, it's a huge 88-acre site that we'll be building on that used to be essentially a gas holder for a large portion of West London, ultimately. More recently, it's been used as an overflow car park for Heathrow Airport, and we've owned the site for the last 6 years, coming together with a fantastic master plan that's going to completely transform this area of West London. So one of the key things about Southall and one of the excellent offerings that it will have is accessibility across London and also out into the west of the UK. This is going to be further enhanced by the opening of Crossrail next year, which ultimately means you can be located in Southall, Zone 4 location, but be in Zone 1, Paddington, in just 14 minutes. You can also get to the areas like Bond Street in just 17 minutes and Canary Wharf in just 31 minutes. So what this means and why this area is, so well positioned and important, and ultimately going to, consistently have demand for future renters and owners, is your accessibility across London is really second to none. Certainly when you compare it to the price point of the development. You've got Heathrow, just 8 minutes away. That means obviously it's an appeal to international travel, but also to the number of companies that are located there, such as British Airways, KLM, Virgin, and Etihad Airways. Paddington with Microsoft, Vodafone, and Visa is just 14 minutes away. Tottenham Court Road with Google, University College London, and Facebook is just 19 minutes away. And Farringdon with Amazon, Royal Mail, LinkedIn, and Lego just 22 minutes away. And of course, you've got Canary Wharf, the financial hub of the world, is just 30 minutes on a direct train from Southall itself. Not only that, going out to the west of the UK, places like Reading, where you've got Huawei, Deloitte, and Cisco, that is just 37 minutes on our direct train. So it really implements how important Crossrail is for this local area. And then by car as well, you can get to Stockley Park in just 23 minutes, where Apple, Toshiba, Canon, and Sharp, the technological sort of powerhouses, are located. So it really will be in high demand for employees and also students throughout London and the UK. So a little bit about our site and a bit of sort of Southall, Waterside in numbers. Ultimately, it's going to offer 90 acres of parkland on your doorstep. Once the development is complete, it will be one of the most biodiverse developments in the UK, offering over 2,000 new trees and an array of new facilities and fitness trails. Connectivity, I've already touched on, is fantastic. You've got Heathrow 8 minutes away, the Crossrail station on your doorstep, but we're also going to implement 2 new bus services for getting around the local area. In terms of our development itself, it's going to be a £1 billion investment into the local area and £24 million of planning contributions into the local community. So we're not just focusing on the development that we're building on, we're also investing hugely on the local area itself. And ultimately what that means is the development is going to deliver over 21,000 new jobs in the area. On top of that, the development is going to incorporate a whole new array of leisure, retail, and entertainment facilities, with over 500,000 square feet of commercial space on the development, as well as office and leisure space as well. In total, we'll deliver over 3,750 homes. There'll be 944 cycle spaces and 1 kilometre of canal-side living as well. Whittier touched on it earlier in terms of regeneration projects that we've done, across London as part of the Berkeley Group. And really, it's something that we specialise in, taking areas and completely transforming and regenerating them. And what we've seen time and time again is how this regeneration impacts capital values. As you can see here at Royal Arsenal, in 2010, which was by no means the start of the development, we were achieving around £250 a square foot. By 2018, that was up to £600 a square foot, and now we're achieving nearer to £1,000 a square foot of that development. Same can be said for Woodbury Down, where in 2012, a 1-bedroom apartment was on average £275,000. By 2018, that was up to £540,000, a 96% increase in just 6 years. And also at Kidbrooke Village, where in Manhattan, back in 2010 would be £162,000, and by 2018 is in excess of £350,000. And this really just shows how regenerating placemaking and creating new places where people want to call home ultimately increases the value of the area, regardless of market conditions. So what are the sort of main reasons and the 10 key sort of investment reasons and the reasons people want to call Southall Waterside their home? Well, first of all, is obviously the offering that we're going to bring to the area. It's going to be a mixed use development. It's not just homes, but it's also the retail, leisure, park, and ultimately will be a place where people want to call home and want to rent and want to buy from. Of course, the investment opportunity, as I alluded to a couple of slides ago, a regeneration project of this size really offers a fantastic place to invest because you can then grow with the development as it becomes in more and more demand from today, where it's essentially just the beginning of a major 20-year plan, and you can grow with it as it becomes one of the key areas or key new villages in West London. Of course, the connections, which I've already talked about. In terms of Southall Station itself, they're spending £1.9 million on this. And the Crossrail that's opening next year is going to give you unprecedented access to all of London and further afield. Of course, the leisure facilities that we provide at Berkeley are always second to none. And here at Southall Waterside, these are going to be fantastic with entertainment, restaurants, retail, and office space all incorporated into the development. And also, the parkland, although we're located in the heart of West London in the borough of Ealing, close to Heathrow Airport, close to central London, Paddington, we're also going to offer such a huge array and over 100 acres of parkland on your doorstep. You can have the benefit of central London living, but also the benefit of rural living, which is very rare. And the residence facilities, the private residence facilities that are going to be offered to clients that purchase at Southall Waterside will be just like that of what we offer in Zone 1 and Zone 2 developments. There's going to be a residents-only lounge, which of course will be fantastic in times like these when you're working from home. You can go down to the lounge and work from there, or if you're working from home. There's a luxury spa, a gym, a 24-hour concierge, but there's also going to be a car club, electric car charging points, and cycle store and hire. And on top of that, we're also going to have the waterside living. There's ultimately going to be 1.2 kilometers of river frontage along the Grand Union Canal, which we're spending millions of pounds on refurbishing. And on top of that, we're going to have a new canal-side facility that will provide a place where you can eat, meet, and ultimately call home, which will always essentially give that sort of level of fantastic riverside living. Of course, the Berkeley quality is something that we're very proud of, and we deliver wherever we build, whether or not that's in central London or out in some of the home counties. And the quality that we have been sort of performing and always building to over the last 40 years is certainly at the forefront of our business and at the forefront of Southall Waterside itself. And that's why 99% of our customers would recommend us to their friends. Not only that as well, of course, it's a £1 billion regeneration project that's going to be built over 20 years. And the benefit that we have as a business is our core financial position. We've got over £1 billion in the bank and no gearing, and we're a FTSE 100 listed company. So what that gives you is sort of peace of mind when you're investing in such, when you're investing in a development that's sort of 10,000 miles away, you know that we're going to deliver the product that we say we're going to deliver. And finally, it's the sustainability aspect of it. The development is designed for the future and ultimately designed as we are a zero carbon developer. So it's going to be low energy lighting. We're going to have water saving fixtures throughout the apartments. We're going to have rainwater harvesting throughout the development, as well as green roofs, recycling, and of course, the new fitness trails, 1 kilometer of canals and electric car charging points. So here you can sort of see the master plan of the development. Of course, it is a big project with the 3,750 homes, but ultimately where we're sort of focusing today is on phase 1 and the first releases. And where that will be is essentially the green highlighted spot there on the map. As you can see, it's going to be close walking distance to the Elizabeth line, which is fantastic, but it's also right next door to that area marked out in orange, which is essentially going to be the community hub, the retail hub, and also the commercial hub of the development, as well as the new cinema. So all of that is going to be within walking distance of the development and of phase 1. In terms of phase 1, what are we offering here today? Well, ultimately, it's going to be consisting of 4 blocks: Sibley House, Watson House, Amber House, and Edwin House. And this is essentially what we're releasing. This is the first release, which obviously has gone down very well over the last sort of week or so, where we had our UK first release and now launching internationally. We have a selection of 1, 2, and 3 bedrooms, as well as Manhattan apartments available. And essentially, all of the apartments offer fantastic views over the linear park or over the landscape gardens in between each of the blocks. In terms of the interior design will be up to the highest quality that you'd expect of Berkeley. Essentially, all of the major fixtures and fittings that you would expect come with the apartment. So all of your kitchens, bathrooms, and living areas will all be integrated within the development and built essentially to work from day one. So once we complete, you can either let out your house or move into your home, from day one, which is fantastic. That's just a picture of one of the kitchens, and there's the bathroom, essentially, that will come like that. So in terms of the design of the apartments as well, whether or not you're going for a Manhattan 1, 2, or 3 bedroom, they're all designed to maximize space in good square layouts. On top of that, we also have fantastic outside space, which I'm sure we'll all agree is very important in times like this when we're at home. And that ultimately means that these apartments are very well sized and will offer great spacious living no matter what you go for. If you look at a Manhattan apartment here, for example, it's 430 square foot plus a 60 square foot terrace. So it's 500 square foot essentially in total, which is a great size for a studio apartment. And the 1 bedroom has plenty of space for a working area. And the 2 bedrooms, you'll see, have great designs and make sure that the 2nd bedroom is on par with the 1st bedroom. So that means when it comes to either renting it out or selling it, you're not compromising on space between the unit types, and it'll essentially appeal to as many people as possible. And there's also a selected number of 3 bedrooms available that will have 2 outside spaces, which is quite exciting. So in terms of just some of the facts and figures of the development, it's on a 999-year lease, so a virtual freehold. There is parking available for the 2 and 3 bedroom apartments. The service charge is just £3.70 per square foot, which when you compare for what you're getting to central London is extremely affordable, because you're getting your gym, your spa, your building insurance, cleaning, concierge service, maintenance, staffing and fees, all included within that £3.70. And the ground rents are also very reasonable as well. Ultimately, in reserving a property, it's a £2,000 reservation fee, and that essentially takes the property off the market. Then 10% of the purchase price after 21 days, a further 10% after 6 months, and an additional 5% after 12 months, depending on when your completion is. Ultimately, we have availability of apartments today that complete at the end of this year, moving all the way into the end of next year. And in terms of the pricing, we start at £300,000 for a studio apartment. A 1 bed is £370,000, a 2 bed is £487,000, and 3 beds from £652,000. So please do reach out to Widya, Christine and their team if you'd like to have a more in-depth view and talk about some options that we have available at Southall.
Thank you so much, Widya and Rob, for your presentation. We are so excited about your newly launched project, Southall Waterside. We are now open the floor for Q&A.